Hey traders, hey, may pips be upon you. Look, I just wanted to give you a quick update on the NAS100 trade. It's going well. It's actually going well. Uh, but there's some things that I want to point out. One, what we have here with this bear flag is the completion of the bear flag, and the completion is when it reaches here, right? All right, when it reaches the point at which it started to the point of origin of the bear flag. All right, all right, and that's a beautiful thing because what you want to look for in a bear flag is the pole. You want to see the pole from the distance from here to here. Why don't I draw it instead of pointing? The distance from here. It's early. I'm sorry. The distance from here to here show itself over here. And uh, and we can see that's exactly what happened. All right, score one for your boy. All right, and so uh, moving on from that, see how price has uh, come down to the first level of support. That's why I have it sitting here. This is a good key. This is a good strong level. It's a key level, as I pointed out in my previous video. Go check it out. Uh, the one just before this one. All right. And we're sitting back at that support. Price broke this area of the range, broke down, and came back in. Now that makes me nervous when you see a breakout break back in. All right, because sometimes what that ends up being is bang, boom, bang, zing. All right, and a lot of people are taking a bullish entry here, a signal for a long here. All right, but I'm gonna tell you something. This is what I see. Let me get rid of this. This is what I see. I see a classic three confluence trade here. Now, what I want to be careful of is this area here. All right, this particular candle. If this candle goes past, it closes past the high of this candle, then yeah, we're going to see a bang, boom, bang, bing. All right, we're going to see that. But using my lovely Fibonacci's, all right, using the Fibonacci. Let me show you how I did it first. Using the Fibonacci's, all right. What you see is the impulse down. First of all, what you see is the impulse down, and with the setup I'm talking about, the three confluence setup, you want to see a. Did I just really do that? You want to see a clean break of the level, right? You want to see a clean break of the level, and then a return to the level, and then a continuation of the uh, the original direction, which is the direction of the trend. All right, that is the ICI, like I explained in the previous video. That is the impulse, correction, and impulse. All right, and I see it in the middle of it right now. All right, I see the impulse here, which is very clear. It breaks the level, right, and the correction, obvious, broke back into the range. And now what I want to see is what is expected, the continuation, the next impulse, completing the cycle. ICI, right? All right. But if it breaks above here, that's not a good thing. Now, what do we have? What are my confluences? Well, look at the when you get the ICI, the way you want to measure the uh, the pullback is by taking your Fibonacci's and going starting at the beginning of the move, the beginning of the impulse to the bottom. Excuse me. Oh, wow. I'm having real problems here today. All right. You want to take the beginning of the move from the top to the bottom. A lot of people are going to say, hey, look, when you use the Fibonacci, you start at the swing high and you go to the swing low. Of course, that's the normal way. But when I'm talking specifically about this cycle of move, the ICI, you want to make sure that you start at the beginning of the move. And what you got to notice is that this candle here was all white at one time, and then the move happened, came up here to this strong support, and the move started, opened up here, and continued that move. So I look at the start of the impulse to the bottom of the impulse down here, right? I should put it here. All right. Now, this gives us a measurement of what the correction is. All right. And the correction usually goes to the hot spot, which is the 618 fib. All right. This is the most frequented of all the Fibonacci levels. All right. The 382 comes in a close second, followed by the 50, a close third. You see 50, you'll see 705, you'll see 786. 786 is the last line of a full retracement, that the way you want to measure it. Now, and you'll see that it was respected. It was respected here. All right. And you want to align with this particular strategy, the three confluence strategy. You want to align that with structure. All right. You want to align your Fibonacci with structure. If it lines up well with the structure, you can expect that that's where it's going to come back and visit. All right. A lot of people will take shorts right here. All right. And in this case, it lines up pretty close. I probably would have put my entry right here, because I like the open and closes. Sometimes it bounces off of the wick. You just got to be careful of it. All right. But it responded, it reacted nicely. All right. But this is a strong support here. So it very well could shoot on up. All right. The fact that it broke back into this range, that makes me nervous. But the third confluence is this 50 EMA here. All right. This 50 EMA acts as dynamic resistance in this case. And it gives us a second wall of defense to protect our stop losses. So a trade, if you're not in it, if you're not still in it and holding, since the beginning of this beautiful trade, a trade would look something like this. All right. Now see, I would make an adjustment down here because this exceeded the TP, our target point. It came up, tested the 50 EMA, and came down. This actually itself was its own trade. So, and you see how the reaction of this candle here makes me nervous, because it was tested as a resistance here, and now it's being tested as support. These are the things you have to notice, and it very well could go up. And if it, like I said, if it closes past the the high of this doggone candle here, I will exit my trade, and I'll exit my overall swing trade in profit, but I won't risk it going up and taking away all the profits and everything. It got down to this far. I said in my video that it will reach this level first, and then I'm looking for it to reach this level. All right. So as it struggles here, we'll see what happens. Okay. But those are my thoughts. We have a 3-con. We got this 618 lined up with structure. That's 2. And we got the 50 EMA acting as dynamic resistance, so that it protects the stop loss. You want to make sure, that your risk to reward is always at least 2 to 1. So that's close enough. So that's what my trade would end up looking like. All right. And I would have this, oh, I'm sorry. I would have this at the 618. So let me make adjustment here real quick. Right. There you go. All right. So let's see. We're getting a little wick action over here. So I'm hoping that this white candle, this bullish candle will end up like this bearish one. Give me a nice wick down and then break this low. Once it breaks this low, we're good to go. We can breathe, but I'm not breathing right now. I'm not breathing right now. But that wick is getting a little bigger, so that's a good sign. Okay. Hopefully, if you're going to scalp this, this will be your TP. All right. The point of the pullback, that's always your TP1. All right, and then you use your Fibonacci extensions for TP2, and the way you use it, I'm glad I came on that subject. The way you want to use your Fibonacci retracements is you want to go from the swing high to the low, and in this case, one could go here. All right, one could go here and target here. You understand? And in the long view, the wide view, you see this trend line there, right? What is that? We are in a channel. That's why you would target that. That's why you would target this right here. Okay. So I hope you found this helpful. This is a pretty long time ascending channel. And price is respecting it. So, we got one touch, two touches for the bottom. And I'm hoping that we get this third one here. And then we can call this a wrap. We can call it a wrap. Okay. Me and my notches. All right. So I'm going to exit the doggone video, and I'm hoping that this helps. And let's keep an eye on on the 1 hour. That wick looks a whole lot better. All right, but let's keep an eye on it. And let's see how it goes.